Kale, Senior Vice President at Elara Capital, who tracks the auto space very closely, is now joining us. A lot of news flow around autos, Jay. The numbers, the monthly numbers are flowing in. Ola Electric IPO is round the corner. Let's start with Ola Electric. Have you looked at the RHP number yet, or data which has been posted in the public domain?
Yes, I mean, they've given their financials, of course, till Q1 FY24 on the financial side in the DRHP, in the RHP. So over there, I think, the market share wise, they've ramped up pretty well. One needs to see the sustenance of that market share with the other OEMs also ramping up their capacities as well as distribution network. I think the profitability, of course, as expected, is weaker currently. With PLI benefits and with the aggressive pricing that they have had in the recent past, their profitability will be keenly watched because EV volumes, if you see, have still held up well in June. If you see the penetration levels are at around 5.8%, which is largely in line with our estimates. So going forward with the ramp up of other competition on their capacity as well as distribution network, as well as the aggressive pricing of Ola Electric, how sustainable this is in light of the profitability in their disclosed numbers will be a key thing to watch out for on how sustainable these market share gains are.
Okay, so that's about Ola IPO just around the corner perhaps. The other one, of course, is Hyundai, which is also expected soon. But before I get to Hyundai, Jay, wanted your take regarding the auto sales data that has come in so far. Looks like by and large, it's a beat coming versus the expectations, especially on the likes of Bajaj Auto, where there is a bit of recovery. Even the likes of Atul Auto, Maruti Suzuki, decent set coming in from those, right?
Yeah, I mean, if you see two-wheelers as a pack, if you see even the retail sales for which the entire industry numbers are out on the Vahan retail sales, they have grown at a decent 4 to 5%. And even if you see a block of March to June, they are tracking that close to 10% on retail growth, which is largely in line with our FY25 growth estimate of 9%. In terms of wholesales, of course, there is this portion of exports coming in a little higher than estimate, both for Bajaj as well as Maruti, whereas domestic sales were largely in line with estimates. But as an industry, if I have to look at, two-wheelers is holding up much better than passenger vehicles, where we've seen some bit of pain in the last 2-3 months, with inventories also rising in the passenger vehicle industry. And two-wheelers in terms of retail growth has been much better off. So it will be keenly watched how the inventory is managed by the passenger vehicle players. And if retail sales picks up, especially after the last 2-3 months have been marred by the elections as well as the heat wave, etc., how monsoon plays out and how the entry-level buyer comes back will be keenly monitored for passenger vehicle industry.
Jay, what did you make of the numbers for Eicher Motors? Appears slightly higher. Also, Leyland versus Escorts. Essentially, I want to talk to you about how the numbers are pairing in for your CV end of the cycle, and what is the sense you're making? Are we in a recovery mode in the second half for CV cycle?
I think in the CV cycle, of course, from a tonnage wise, if you see, we've already crossed the tonnage peaks of FY19 and FY23 itself, and FY24 was much higher. From a volume side, if you see, last 2 months was a growth on a low base of last year. Because last year had seen a big pre-buy in March, and hence April, May was relatively lower. So on a low base, you're seeing some bit of growth in the first 2-3 months of the fiscal. For the full year, our growth estimate is still at around 3-4% odd growth. Second half is expected to be better with, because the government's just been formed, the infrastructure activity in the monsoons is not expected to pick up pace, and which will pick up pace only in the second half from October onwards. So growth is expected to be much better in the second half. What will be interesting to see is the profitability. I think this time around, the industry is much more disciplined in terms of their pricing in the market, and hence the margins have been better than estimate. But our view is that we are largely towards the peak of the cycle, and one needs to be very cautious on the because when you're near the peak of the cycle, the incremental growth rate may not be as high as what we could get in a passenger vehicle or a two-wheeler industry as such.
That's a word coming in near to the peak of the cycle, but would you call it the same for the stock prices as well? Are we near the peak already for a lot of these names? 2024 was a solid run, and 2023 was a solid run, and so far in 2024 it hasn't been bad at all.
Yeah, I mean, autos has seen a stellar run. We've seen in Q4 a lot of earnings getting upgrades for OEMs. We think that the large part of the OEM upgrades in terms of earnings is behind us. Q1 will be keenly watched. There could be some OEMs who could see some downgrades, some OEMs retaining the numbers. A large part of the upgrades in the earnings cycle, in our view, is behind us, and then it will be mainly stock selective. It may not have a sector run as such as what we had seen in the last 8 to 10 months. It will be clearly stock specific outperformance and underperformance that one would want to track from here on, purely basis your earnings cuts and earnings upgrades that we will see.
We saw, kind of while everybody was very excited about, I'm talking about 6 to 8 months back, when TVS was around 1,000 rupees, 1,100 odd. Everybody got very excited about this Ola Electric IPO and all of that. But actually the big move came in, if you can pull up the charts for last 1 year, in TVS, in Bajaj and Hero, because the legacy guys also had by the time Ola Electric became large or Ather became large, they had kind of developed their own some part of the EV two-wheeler business reasonably sized, and hence a value unlocking. Is that trade over now? Are these fair prices for most of the two-wheeler companies, pricing in both ends, legacy as well as EV part of the business, or some more room for re-rating?
Yeah, I think a large part of that has played out for the two-wheeler names. But if you see the overall volume growth momentum is still pretty resilient for the two-wheeler industry versus even a passenger vehicle or a commercial vehicle industry. And within that, we would like to be in names, who have structural levers of market share gains as well as margin increase, and which will give a very strong earnings growth. So one of them, of course, is TVS, second being Bajaj. So it's something, where valuations, yes, have been expensive relative to their historical valuations, but that has been the case for a large part of the market participants. So, we would still like to place our bets on companies which has a macro tailwind of earnings of volume growth for the industry outpacing the other segments. And in certain cases within that segments, companies who have levers of margin expansion as well. And, TVS seems to be one of them. So we would still have an outperformer rating on TVS.
Okay, so still positive towards TVS Motors. Thanks, Jay, for making time and speaking with us regarding a whole host of issues which are at play for the auto sector.
If you like this video, then like, share and subscribe to ET Now.